Hey everybody, I hope you are having a wonderful Friday. We still have a ton of people joining. We're going to go ahead and get started, but I do just want to let you know that if you miss any part of this, if you miss the beginning, and I'll say this again in a few minutes, we will be posting this after the fact so that you can rewatch it again in the future. We have a huge slide deck today. We're going to bring you a lot of information. Well, I've prepared a lot of information. Matt's going to bring you a lot of information. And really the goal today is for you to better understand how titling works and the different pros and cons of using title other than your personal name. I get this question literally on every consult call I do. It's one of the first questions that investors ask me. And it's difficult for me because, of course, I'm not an attorney. And although I can tell you my opinion as a real estate professional and as an investor, I wanted you to hear it from the horse's mouth. And so, very, very excited to have Matt here today. As I've mentioned on a couple of my preps leading up to this, Matt has taught at my live events. He's fantastic. He's just a wealth of information. And so, I know you're going to really enjoy his presentation today. We have some awesome, awesome classes coming up. We have a great one coming up on March 6th, and we're going to be talking about real estate professional status, everything to do with your taxes, what that means, what passive income versus active income is, how you work to allow your real estate losses to go against your active income. All those questions we're going to answer for you, and that's going to be March 6th at 12 o'clock. And of course, we've just got a very robust webinar schedule for the next 3 to 4 months. And so go to our website, go to social media, you'll be able to pull all that information up. And that's all going to culminate on our April 17th Wealth and Rentals virtual conference. And again, that's that 3-hour complete coverage event. And that is a one-time air only. A lot of the others are going to be available after the fact as well. But remember, if you register for a webinar and you can't attend, it will send you a link to be able to watch it after we finish. Of course, you can always go over to YouTube to watch the webinar with the slides or any of your favorite podcast channels to watch the podcast audio or listen to it on your way to work or working out or whatever it is you like to do with your podcasts after the fact. We have a virtual mastermind upcoming May 1st. This is our small group in-person mastermind deep dive into your specific real estate portfolio and financial goals. This is again limited to a small group. We do have a few slots left. If this is something that you're interested in, please reach out to the team. You can reach out to Eric, info@slaughterinvesting.com, or visit our website, or of course use any of our QR codes that will appear throughout the webinar today. Our meetup is next week. Matt, no pressure, but you're local. I expect you to be there. That's going to be February 27th, 11:30 to 12:30 in Allen at Kelly's at the Village Craft Tavern. We had such a great response to our first meetup this past month. Really excited to have one this month again here in Allen. And the next month, we're going to do an evening meetup for those of you who begged because of working during the day. Of course, my goal being to help you quit having to do that, which is one of the great reasons why we love putting together meetups and education and all those things that we do. In April, we've got our Spring Fling event, and this is our big, big weekend. We've got our property bus tour. This is a charter bus tour. I will be there educating on the market and the areas personally with Michael. We have our spring mixer, and that's going to be the Saturday. Big event at our home, family friendly. We'll end that large event with a fireworks show, and then we have our in-person small group mastermind that Sunday, the 28th. So for more information on that, you can visit our website, slaughterinvesting.com. And if you want to just take a property tour at some other point in time, we have lots of weekend dates, upcoming tours. We've expanded to twice a month. If you haven't already heard that, we did that because we kept selling out tours. And so these are great. And they're also a very intimate way to get to know the area, get to know the model, get to know the team, and really understand the power of real estate investing and the unique opportunity that we have here in North Texas. Each Thursday, we call them Property Tours Days. I'm bringing to you available inventory from OmniKey Realty. This is off-market new construction, one to four family. We have single family duplex. We do a lot of, we're going to have some really neat fourplexes upcoming. So very excited for these. They air at both 12 and 8. And then finally, if you've not joined our mailing list, that's where you're going to stay up to date on all the type of stuff I just talked to you about. Same with our texting list. If you haven't joined those, I certainly recommend that you do so. Before I begin, everything that we're going to talk about today is based on my years of experience. Y'all have heard this so many times. It's like second nature at this point. But Everything we're going to talk about is based on my years of experience and knowledge, not only operating a real estate investment and property management firm, but also being a real estate investor myself. I tell you all the time, I'm one tool in your toolbox, and my goal is to connect you with other people who can help you on your investment journey as you determine the investment model that works best for you and your situation. Of course, all real estate can be subject to potential loss of monies invested. However, we do believe that our real estate model and the way that we do our investing is the best model out there. But again, we are one tool in our toolbox. And so it is important that you are talking to those in your life that you trust and others who can guide you on your journey as you develop the plan that's going to work best for you. One of these experts and one of these tools that I love to use are attorneys, and that's because they're such a wealth of knowledge and they look at things a little bit differently than we do. They look at things from a different set of lenses than perhaps what a traditional real estate investor or real estate agent or even just someone who's getting started would look at things for. And so one of the things I love about Matt is he's very down to earth, he's very transparent, and he's very blunt, which is great because if you haven't heard me talk before, so am I. So I want to give you just a couple quick updates before we go into all of the things we're going to talk about today about real estate investing and titling and really how you protect yourself as a real estate investor. The thing I think that's on everyone's mind more than anything else is interest rates. And so we've had quite a few things happen over the last few months, but the bottom line is that the trends are moving down. And don't get surprised if you see little ticks here or there. Everything is so reactionary right now, not just us as a society, but also rates and businesses and the news. And so if one person says one thing that doesn't exactly fit the narrative that they said last time, then what happens is rates go up. And that's exactly what happened the last couple of weeks. But overall, we are trending down. There was a lot of people saying rates were going to be down in March. I've been pretty clear. I thought it was going to be sometime between June and August. They're still anticipating 3 rate cuts this year. Whether it's going to get us in the 5s or keep us in the low 6s, yet to be determined. But the bottom line is that you can always refinance a rate. You cannot manufacture lower housing prices. Top economists, and I love Yoon. I love him because he's so pro Dallas, as I am, Dallas meaning all of North Texas. And he is expecting up to 4 federal rate cuts in 2024. So it'll be really interesting to see where we land with all of that over the course of the coming 10 months. But pretty much everyone's in agreement. Rates are coming down. We're getting back to below normal. You know, when I started heavy investing in 2017, 2016, my prime rates on my Fannie Mae mortgages were 6.25. So we're not that far above of what actually normal is. We just got spoiled. And the great thing is when we make a mistake once, we're going to make it again. And so I definitely think we're going to see investment rates get back down into the 5s. The question is going to be, when is that going to be? Of course, mortgage rate optimism is at all-time highs. The news is talking about this a lot. It's front and center with anyone who's in any type of financial world right now. That's probably leading to that. But the bottom line is that experts agree rates are coming down. So the question is, what are you going to do about it? This is the highest level of optimism we've had in the history of the survey being conducted. And so I think that, is this educated people feeling good about it? Who knows? But the bottom line is that the American people are feeling positive. And when American people feel positive, the economy tends to do better. They spend more money, they feel more optimistic. And so that translates into everything that is our economy. So good things for us. And of course, the migration here continues. Net migration for Gen Z has been out of control for North Texas and Texas as a whole. You can see that we are surpassing everybody, but that's not just in Gen Z, right? That's pretty much everybody right now. And home sales are up. You know, Dallas made all the records, and the only place that had a little bit of better numbers on a couple of metrics were Salt Lake City, which obviously is not an investment market I believe in. But at the end of the day, what you need to know, rates are trending downward, sentiment is high. That means things positive are coming. We're already seeing a very hot spring market. Everything is looking good, and DFW is really doing incredible. We have a lot of the areas we work are up over 11% year over year, and that is just incredible coming out of what is, I'm not going to call it a recession because obviously real estate has done very well, but the economy has definitely been hit because of these high interest rates and this pause. And so we're very excited to see what's happening. So we had a big announcement with TI doing yet another expansion here down in Dallas this time, $119 million expansion at their Dallas headquarters. And these are all the types of things that we're seeing that are showing us that things are heading in the direction we want them to go. And of course, we all know about the multi-billion-dollar plants that are coming to Sherman. So all of that should get you excited about real estate, excited about investing in real estate. And now my job is to make sure you do it safely. So I want to introduce everyone to Matthew. Matthew has been someone I've known for many years. He's a friend of mine who introduced us. And I have always just been impressed when I hear him speak. I see how much he gives his time answering questions to people, not only in, person and consults, but online. People like him and people like me, we love to share our knowledge. And that's something that's really rare to find, especially on social media with someone who is an attorney. So that's one of the things that drew me to him. It's one of the reasons that I refer to him and why I invite him to come speak to you all today. So, Matthew, thank you so much for joining us.
And I'm glad to be here. Definitely. I'm just astonished at how busy you are. When I'm looking at your slides and your calendar and all the things you got going on, I don't know if I could keep up with that. That's impressive.
It's the question that I get second most asked is, when do I sleep? And,
Yeah.
I sleep a full night's sleep every single night, but I am definitely going nonstop until that point of time. But as everybody knows, I'm a high volume real estate investor. If you haven't heard me speak before, I am always this peppy, and it's not from caffeine. At the end of the day, I love what I do. I am passionate about what I do. I am just astonished at what it has done for my family and myself. And I am just very, very blessed to be operating in the market that I am and the kind of sect of real estate that I am, and to have made connections and been able to, continue to do this for it'll be 18 years. So very, very blessed, very happy to be here. And I love meeting with like-minded people like Matt. Matt, will you tell everybody a little bit about yourself so they know what I know about you, which is that you're a powerhouse and a great legal mind in real estate?
Yeah, I was a dot-com casualty. That's when I graduated undergrad was in 2000. I was a programmer, and so no jobs there. Right whenever I entered the market, it was great, and then it immediately went away. So I went into the title business, and it's funny because during the subprime boom, they were hiring anybody that could type really fast, which obviously I could, and so I began as a title examiner and started figuring out all the processes and how to make money in the business, and decided to create a business plan, go to law school, and went to law school not to be a lawyer and then figure out what to do, but to do exactly what I was designing to do. Started title operations in Texas, Florida, Tennessee, sold all that off, and 2020, literally February 2020, which was actually a blessing because the bulk of my business was default. So it would not have been good if I hadn't have sold it the month before everything shut down. So I've had a lot of good luck in my career, but I've also read the market very well. I do very well in a down market. That's typically my wheelhouse. But yeah, as far as like my practice goes, we only do real estate law and anything related to real estate. And we represent a tremendous number of investors, mostly here in the U.S., some in other countries. And I've been doing that part of my practice on my own since 2010 is when I started the firm. So it's been quite a run. I'm very blessed to be able to keep doing it. So
That's awesome. So you're a few years behind me, so at least I have something ahead of you.
that's right.
Well, I mean, I think let's just kind of open this really broadly, because I think for me that's one of the things that I think a lot of people don't understand, and that is really just talking about how they need to hold their real estate and at what point they need to start having that conversation, because that, to me, it's a really individual type of thing. Because when someone calls me and they're a school teacher and they're making, let's say, 60,000 a year, and they've saved up enough to start their first property, that's a very different call than from someone who calls me. I had one of these a couple weeks ago where he sold a business. He has $8 million, and doesn't own real estate. He owns his primary home, but he wants to go buy real estate. And so there's a lot of, I think, decision making that has to kind of happen on the fly, not only when you're representing someone, I'm sure, but also just being a real estate investor. And a lot of what we do, what I do, is trying to help people know how to make those decisions. And that's part of a plan, right? That's part of, you talked about your strategy and building what you wanted to do. We all do that as real estate investors too. And so I think let's start with the basics, which is, what is an LLC? Because I think a lot of people think it's a corporation. A lot of people think maybe it's a partnership. There's a lot of misunderstanding about the protections it offers. And so I think, why don't we just kind of start there?
Yeah, so what I find is even, very educated, very knowledgeable people tend to misunderstand the difference of labeling a particular structure. When you look at an LLC, that's something the IRS doesn't recognize at all. Okay, it's set up at a state level. All states recognize it. They have a limited liability company option as a structure. And then at the federal level, you get to choose what you are. You get to tell the IRS, hey, I'm a partnership. Doesn't affect your liability at all to tell them that. Or you can tell them, hey, I'm an S corp or a C corp or whatever, and you tell the IRS how you want to be treated, because the IRS doesn't technically recognize you as being anything on as a default, and so you have to tell them what you want to be, and that determination is something I think we'll get into a little later, um, but essentially that's the difference. And so when we look at a limited liability company, it is the entity of choice, in my opinion, for individuals that are not planning to take a business public. That's not to say you couldn't convert it later, but if you're gonna become a publicly traded company, you are kind of pigeonholed into being a C corp. If you're a foreign individual, there are instances where you would not use an LLC because you don't want to deal with tax treaty violations and whatnot, and you want to minimize your taxing exposure because you may have to pay in two different jurisdictions. But I don't know anyone in the US that is a citizen of the US that would ever want to acquire and hold real estate in something other than an LLC. It just doesn't make any sense. And there's tons of reasons for that. I can jump into them, or we can kind of guide through the slides as well, because I have read through the slides and I know we get into that too a little bit. Um, but essentially, with any entity, and the entity type that you select doesn't truly impact the liability shield. Okay, so that's something that's often misunderstood. So whether you choose to be some sort of a corporation or an LLC or whatever, that decision is not going to impact your liability shield. Okay. Now, one thing that I can't stress enough, no matter what you do, like no matter how many layers you put out there or how much money or time you spend into creating your structures, you cannot eliminate your own exposure related to your own acts of negligence. So that means, let's say that I have a company that makes widgets, okay? And it's a widget factory, and it's an LLC or whatever. It doesn't matter the structure. We'll say it's an LLC. If I personally commit an act of negligence that creates a bad widget that results in damages to someone else, I'm personally liable for that. So anything you do on your own is a problem. This is why I always tell my investors, you're better off outsourcing it when you can financially justify it. All of your repairs, you should also outsource all your property management, those types of things, because when you do that, you're jettisoning that risk. Whereas if you do it individually as yourself, it doesn't matter your structure, you're still going to be liable for those things. So try not to do work on your rental properties personally if you can keep from it. But if you have an LLC and you do very little and you're a purely passive holder of real estate, generally speaking, if there's a liability event on the property, the only thing that plaintiff can go after is going to be the LLC and what the LLC owns. It cannot jump past that and come after you individually. This is kind of like, everybody's heard of the corporate veil thing. It's the same thing essentially with an LLC. So That's why you get it in a nutshell, is it's going to keep people from suing you personally for things associated with your property.
I think that's a great way to characterize it. And I tell people this a lot. We talk about how that personal veil really changes things. And so I have people ask me all the time, well, do you have owners get sued? Well, no, not really. Sometimes if we have like a deposit dispute, then that gets sued. And so I also try to explain to people that you're preparing for the one in a million. If you're doing your business right and you're buying properties right, which we do, 99% new construction, it's really about making sure you protect yourself every way you can. But breaking that veil is not as difficult, I think, as a lot of people think it is, especially not if there's some type of personal fraud or something that happens. And so we talk through that with people, but I think it's very hard to get people to really understand that until they've experienced something like it when you're personally wronged. It's the
Yeah,
same
and
reason
it's
why people,
yeah.
don't give all your contractor the money up front.
No, that's exactly it. Most people think that if they set up the LLC, they can still go about doing whatever they need to do on the property. And, just for, you know, uh, just to reference something I have seen, homeowner or, investor owns a property, it's in an LLC. They change the ceiling fan in the master bedroom, and they did it improperly. They really butchered it. And it was the owner of the LLC that did it because they were trying to save money, and they didn't install it correctly. The ceiling fan fell on the tenant, and of course they, got hurt. Wasn't anything super bad, but there were still damages there, and they didn't understand why they were personally liable for that. Well, it's because you did the actual ceiling fan replacement. So yes, piercing through the corporate veil, or in this case, we can come up with their own cool name if you have any ideas. I'm open to that. But going through the LLC protection, if you're actively involved in the business, is a lot easier than people realize.
Yeah, 100%. Try being me.
Yeah.
Being the property manager, the LLC owner, the owner of the
Hmm.
company. That's Yeah, but it goes back to that veil question. And I have that conversation with people all the time because what they want to know is, do you have every property in its own LLC? Which, Matt, my portfolio. Can you imagine?
No,
But at the end of the day, it's all about that shield. It's about that veil and trying to protect yourself as much as you can. And it's very easy if you do it right. It's also very, very easy to do it wrong.
that's very true. And I see here on the slide we have pass through taxation. Yeah, so I'm assuming most of our target audience here is going to be considering an LLC that is going to be used to hold rental assets, right? So you'll
Yep.
either be taking a sole proprietor or partnership election with the IRS. Okay. So you'll be taxed the same way as if you were doing it in your own name from the pass through standpoint. So because like rental income is considered passive income, so you never would have to pay self employment tax on it. And as such, you would not choose to be taxed as an S Corp or a C Corp because you're not avoiding any, it's not active income. Whereas an active income business, and I do want to just touch on this here, I think it's appropriate. An active income business, you probably would never choose to have a partnership election and get pass through taxation because you're going to want to avoid that self employment tax income. So, um, and there's a lot of strategies that you can get into depending on the amount of revenue you're dealing with. But what I will tell you is that you don't want to commingle income types. So you don't want to have your fix and flips running through the same company as you have your buy and holds. Those are two different, very, very different from a tax standpoint and honestly a liability standpoint activities. And so you would want to keep that type of work separate. I'll see individuals that'll have um, I mean, doctors are the worst. I love doctors, but man, they're the worst. They'll have their medical practice and they'll literally have rental properties they own in it. And that's a terrible idea. So don't mix the don't mix the liability issues, but also don't mix the tax issues. So,
Yeah, I
yeah,
like to do the same things too when I'm doing a project. Like if I do a large multifamily that I'm renovating, or like I bought a historic building in downtown Plano that I was going to rent out or maybe flip. Each of those goes in its own LLC because I understand the characteristic of the risk profile for that is different than these long-term simple rental holds. And so some of this goes back into setting up that business plan for yourself and kind of having common sense about what's like what goes together. And if you're going to do something higher risk, and it's something that's higher risk, meaning you might need to fold a company, get sued for a company, whatever that might be, you shouldn't put that with your good, stable, strong assets.
correct. Couldn't have said it better. That's exactly it. And then as far as flexibility and management goes, an LLC, that's the benefit of it, and that's why I generally recommend it. Most people are not going to hold meetings, elect officers, keep minutes, and do quarterly reports, and they're not going to do all of those things that are necessary to maintain a corporation. Okay, if you don't do those things with a corporation, that corporate veil is gone, which means you can be sued personally, right? Most people don't do that. But with an LLC, you don't have to jump through all those hoops. It's designed to be a small business or, rental asset holdings, whatever. It's not designed to be a complex structure that requires a lot of management effort. And that's another important reason to use an LLC over other, structure types.
So if
Um,
somebody does get sued, and obviously this is not something that's common, and I want to be really clear about that because you can go on HGTV and watch horror stories or go on some of these social media groups, and I want to be clear. Outside of deposit disputes, lawsuits in real estate and traditional long-term rentals are not common. Certainly not in new, safe, that type of housing. So it's really important that you know that because a lot of people call me. I had a conversation with one of my mentorship clients, and this is one of the things we were discussing. And it's a lot of people think that it's a lot more common than what it is. I'm not sure why that is, but it's very, very rare. And it's very rare that it actually gets to a court. Like I have never gone to court for a case where I've been sued to testify ever, knock on wood, in 18 years. I have been deposed in my entire life once. So and I, as you guys know, I do a lot of high risk deals. And so it's just not that common. But assuming that someone does get sued and the property is in an LLC, and assuming that they have kept their veil intact, what does that look like?
Yeah, so first of all, I can tell you why people are under the impression that lawsuits happen all the time because they probably talk to a lawyer. And people don't call us up and say, "Hey, Matt, just want you to know everything's been wonderful. I've not been sued by anybody. I've got no problems." That doesn't happen. We only hear about the bad things, the bad stories, right? And so because of that, when you talk to a lawyer, if they're not someone, I tend to be more understanding because I do invest myself. And so for that reason, I get the fact that it is incredibly rare. Can it happen? Sure. If it does and you have an LLC, what might happen, depending on the plaintiff's counsel, they still may try to sue you individually. Okay. I don't typically take that approach myself unless there's a really good reason to, but some plaintiffs lawyers will. They want to sue everybody and let the judge sort it out. If if that happens, the initial step that I take as defense counsel is I try to get you immediately dismissed. And there's a few different strategies to do that. I'm not going to go into it because that would be a lengthy webinar in its own right. But getting you removed from the case individually is the initial step. Um, I have not had one instance where there was not some sort of individual wrongdoing where I have been unable to get the individual removed quickly. So so typically that's not an issue you have to worry about. The other the other thing though is if you have a a lawsuit of any kind though, you need to be aware that with an LLC, you can't, as a non-attorney, represent that LLC, even if you're the only owner or whatever. You're not allowed to. So you will have to have an attorney to handle that lawsuit, which you probably should anyway. But let's see, corporations. Yeah.
I think
So yeah,
we've covered this pretty well, and I'm going to cover this really, really well on our webinar that's upcoming with the CPA that's coming on. So I think that we could focus on some of the other things that we want to talk about today.
sure.
So, one of the questions that I get from people a lot are when they're not married. And I know that's an interesting perspective to take, but I have a lot of people that if they've been together a long time, or maybe they're just starting dating, or maybe it's siblings, and they want to know how they structure that LLC and how it works differently when someone is married. So, why don't we touch on that?
Yeah, if you're I mean, best advice is don't do business with other people. But I'm kidding. Um like so the difference between a single member and a multi-member LLC, like the most important thing, and this is where we get calls all the time, is there's not a well-defined relationship as to who's responsible for what. If there is a person that's going to be basically making all the decisions and everything, that really needs to be in the operating agreement and spelled out in detail. If there's a very disproportionate amount of wealth, amount of money that each person's going to be capable of putting into it, that needs to be spelled out very, very much in detail as well, because those are the two big hangups. When we get calls for issues related to multi-member LLCs, it's usually, yeah, I went into business with this guy. Now he just doesn't do anything. I'm the one doing everything, and it's not fair. All right. That's call one. Call two is always, yeah, we went in, we bought a property, we each doing half the money needed to get it. We bought another one, each doing half. That went on for a period of time. And now all of a sudden, they need to put in some more money to renovate or whatever. And the other guy's like, yeah, I don't have it. And so there's that disproportionate wealth. That's those are really the two big hurdles we run into. If if you are doing a deal to where it's like, yeah, I really want to help out my kid or whoever, like my I want to help my kid and get him involved in this or whatnot. If they don't have any money and they don't have any wealth, it's okay to just have it in your will that they're going to inherit it. You don't have to make them a member of your LLC. You can, um, but they're just going to be sitting there along for the ride. And unless there's a good tax reason to do that, I just wouldn't. But I do see that pretty regularly. And the reason why I wouldn't is, let's say that kid of yours who can't really run anything, doesn't really make any money, makes a bad decision, goes off and gets married. And they're married for like 2 years and then have a horrible divorce. Now you, as a co-member in this LLC, have to deal with that issue, because now the ex-spouse is trying to come after at least a piece of the LLC, and those are just too many headaches to deal with. All of that can easily be defined, though, if you want to add them. I just wouldn't. Like, I've got 3 kids. None of them have any ownership in anything I have going on ever, but they're all in my will. So, um, yeah, my preference is generally to go with a single member when at all possible. If you're taking down bigger deals, that's not possible. You need multiple players, but you want to make sure everybody's pretty equal, or that there's a great understanding of the differences between the parties, and that's very, very well drafted, very mapped out.
One of the other things I see that a lot of people don't know is that a married couple is actually treated or can be treated as a single member LLC. And that's something I think that is important that people understand too.
Yeah, that's correct. Um, Definitely can. The IRS views it as basically a sole proprietorship.
And, so one of the things that I see people want to work towards, and this is something to keep in mind too, that you can take elections with an LLC. So people like me, we do what's called a sub S election, and it allows you to basically have a salary and then have dividends. And Matt, I'll probably let you explain that a little clearer than that is, but you have to make sure you have enough income to be able to do that, and the salary has to be a reasonable salary. But for those of you that are building big investment portfolios where this is really becoming your primary business, that's something that if you haven't already discussed that with your CPA, you definitely should. Is there anything you want to add to that?
Yeah, that's correct. I mean, the usual model, for instance, for law firms, which is what I have, is some form of a partnership, like a limited partnership or something to that effect. And so you'll own the limited partnership units in a personal S corp, and you'll draw a salary from that S corp. You want to choose a salary that is in line with whatever your role is, and then any other distributions above that, you will not, even though it's active income, you will pay no self-employment tax on it. So it can save you considerable money. Again, you have, if it's not your primary like job, it's probably not going to make sense to create that complexity, but it might. It just depends on how much money you're making.
Yeah. I see my clients that own properties in cash or own them longer or that have been following our model for a long time. That's where I start to see that come into play. And certainly,
Yep,
if you're operating in the multifamily space, you're going to hit those thresholds very quickly because just of the sheer size of what you're dealing with.
that's correct. All
So
right, let's.
another thing about LLCs, and a question I get asked a lot is, where do I form it? I have clients that'll call me. They're like, "Well, I think I should form mine in Nevada," or, "Oh, I hear Wyoming is so much better." Can you speak to that a little bit? Because I know that's a question that a lot of people have. And obviously, my entities are all in Texas, except for I have one in Oklahoma because I have to for the state licensing board. But there's a lot of question about where does it make the most sense to form it, especially for our clients who are not here in Texas.
Well, for single family, um, I typically recommend you form it in the state where the property is located, just because you're going to have to register as a foreign entity anyway. And from what I've seen, any savings or any, like, no other word for it, squirrely reasons that you might choose another state don't make sense because you're going to have to register it wherever the property is located anyway. I can tell you that most of the people that pitch the Wyoming strategies and things like that, we used to call them, I can't think of the term, but they're basically trust salesmen, and so they sell these packages and strategies that they claim are unique and nobody's ever come up with before, and it's going to save you a fortune. Um, no other way to say it. Those are generally not true, and not worth it. And so you're going to pay them a boatload of money and not have any savings at all from it. But yeah, so with single family, I typically recommend that you register in the state where the property is located. If it's multifamily or something where you're getting a commercial deal, that's a little different. Usually, you're using some sort of a like a multiple entity structure to where they usually like to see the main entity being out of Delaware. Then you have a local entity, and those get very complex when you start dealing with those kind of decisions. Um, so, like apartments, for instance, there's usually like three entities, sometimes four involved in the ownership structure. But that's really going to be dependent more on what the lender's looking for. So if you've ever bought an apartment complex and say did like a Fannie Mae multifamily loan, you know that you're paying a guy like me a pretty penny to figure out how to make the lender happy on structures because they want it a certain way, and each lender's a little bit different. So
And so this is a good segue into how many LLCs does someone need that has multiple properties? And I'm very vocal in that I do not like putting each property in its own LLC. In fact, I joke with people and tell them I've got 28 million in real estate in one LLC. So I'm definitely not the poster child for series LLCs or tons and tons of companies, each with their own property, but there's a middle ground, right? There's the extremely protective approach, and then there's the extremely lax approach. And so what are your thoughts on this, and how would you guide someone to make this decision?
Yeah, so typically I tell people if all of your assets are going to be in one state, then you need to figure out that particular state's rules on series LLCs. If they're all in Texas, for instance, I am a big fan of a series LLC for single family residences in Texas. Um, in other states, I'm not, because some states either don't recognize series LLCs or they treat them very differently, and the process is too cumbersome. You do have to. It, I'm definitely not a fan of having a whole bunch of single family residences in a whole bunch of different LLCs because you've got two things working against you. One, the annual costs of all your tax filings and whatnot for having the separate entities, but you also have what I would refer to as dead money. And so dead money to me is like when you have a minimal amount of cash that you want to keep in a particular bank account for each one of your bank accounts. Well, let's say that's $1,000. Well, if you've got 100 properties all in separate LLCs, you've literally got $100,000 that you can't use, and so you're not making money off that money, and that's a significant sum of money. That's enough money to probably go buy three more. So that's why I don't like the individual LLCs. However, in the commercial world, that's obviously a different game. You're going to be dealing with special purpose entities, um, and you don't have a choice on that. You just have to do it. But the numbers are usually high enough to where you can make sense of it.
Yeah, the time where I see where it really becomes a necessity is when you're doing pooled investments. So anything that where you're pooling money with other people, obviously you don't want them to be a part of a company that has assets you own solely. And banks, when you're doing some of these big projects, riskier projects, multifamily projects, commercial projects, they generally want one asset, one LLC for their protection. They don't want it
Correct.
clouded with, other things in that entity.
Yeah, absolutely.
So really going back to LLCs, there's a lot of pros. There's a lot of pros, and there's a reason why this is the process that most real estate investors take when they're not going to put it in their personal name. One of the things that I really like about LLCs is the 1031 exchange benefits of having that as flow through. So let me explain what I mean by that. When I sell a property, all of my companies, all the income flows through to my personal tax return. And so, because of that, the taxpayer is my personal social security number. Yes, they have EINs. Yes, they're registered, but I am the taxpayer. And so, on my taxes, and again, I'm not giving tax advice or legal advice, but on my taxes, I can 1031 from one entity, buy in the name of another entity, and it works because they are all flow through entities. And so it allows me a lot of flexibility as I grow my portfolio. And with the number of 1031s and moving parts that I have, and certainly also that the model that we teach, that 2 to 6 year sale model creates, there's a lot of flexibility with that while still having the benefits of having the asset protection, the separation between me and the tenant. The tenant doesn't know who I am, the tenant doesn't know my name, all the tenant knows is my entity, and the easy way that I can integrate that into my estate planning strategy. And so for me, I really truly see pros of LLCs, but of course, there's also disadvantages too. And so, Matt, talk to me a little bit about why someone wouldn't want an LLC. What would be a reason why you would steer them either away from doing a company at all or to a different type?
It, it's going to be rare that I would not recommend it. I will say if you're in a particular state that has very debtor friendly laws and you're, lack of a better term, broke, you have no money, then it would be a waste of money because you're judgment proof already. So any kind of shielding you get is kind of irrelevant at that point. Um, Outside of that, as far as like choosing a different structure, there are a number of reasons why you would choose a different structure, but the main one is if you plan on eventually taking a business public, you are going to need to do a C corp at some point. Those are very complex though, and you can never justify it if you only own like 20 rentals or something, or if you're a foreign individual that's trying to invest in the U.S. In those instances, the structure choices get very complicated because while a U.S. citizen can enjoy all the benefits of an LLC, that's not always the case for somebody from another country. And there's no one size fits all set of rules between the U.S. and another country. Most of my clients are in Japan, and so I'm very familiar with those laws. But if you jump into like another country, say Taiwan, for instance, I've helped people from there and I've helped people in Hong Kong. And I can tell you those rules are completely different on structures. So it's hard to just say exactly when I would not recommend it, but I would say 99 times out of 100, I tell people if you own even one rental property, you're knocking on the door of it making sense because it is minimal and it does force you to have to segregate your income and expenses to an entity, which helps you to better track things, which makes your tax filing generally more favorable. It's not that you're going to save anything necessarily, but you're going to be more diligent because you have to be more diligent. So,
Yeah.
um, you know,
No, it makes sense. And, at the end of the day, it goes back to the, example. If I have a client that's got 8 million in cash versus a client that has just saved up for their first rental, there's something very different going on there trying to protect. And for the person who's got millions, I'm trying to do something very complex to make sure that we cross all our, T's and dot all of our I's. But for the person who's just getting started, my number one goal is getting them cash flow to rebuild what they're putting up on that property. And so there's
correct.
a difference and just how to handle those situations. And some of that just kind of comes with time. There are costs with an LLC. There's not only the filing fees, but annual fees, and then the legal fees if you're going to hire an attorney to do it. You
Hmm.
can easily file an LLC yourself online.
Absolutely.
I when I created OmniKey back in 2006, February, or maybe it was May of '06, something like that. We did it online, and online was still a pretty new thing back then. And I think it took like 4 weeks to get our documents, and you were having to call them on the phone. And that was back in the day before you had all these fancy phone systems. And it's a little different now. I think you could just like upload stuff online and they pop it back in a few days. I think it's probably quite a bit more efficient these days.
Yeah, the only thing I'll say is like if i- if you can't figure out how to do it yourself online, you're better off paying an attorney than to paying LegalZoom because the
Yeah.
difference in cost between the two is minimal, and that tells me you're not typically capable of figuring it out on your own. Um, and so what LegalZoom does is they give you a much prettier interface, but they don't give you any real advice. Um, and then I would also say I would limit that to single member LLCs or LLCs with your spouse. If you're doing deals with other people, especially if they're different roles or if they're different financial positions, I would say if you don't do an attorney, you're gonna spend way more money later if something goes wrong.
Yeah.
Uh,
So as you can tell, I've never created another one online since. I use attorneys to create my LLCs, and I do recommend that as well. A little bit different perspective, I think, now, seasoned than I was at 18, brand new to business. But Obviously, it's always better to use an attorney to do any type of legal documents. I have an attorney on staff, but when clients ask me, and many of you on here, I see names, you've asked me this exact question, and I've told you, use an attorney. And that's because you want to make sure things are done right. And you also want someone that you can point back to if something's done wrong. And that's a really important distinction because an attorney's job is to quite literally fall on the sword if they make a mistake. And so when you're dealing with things like setting up, how you're going to pay your bills and let your kids have inheritance and all these things, the less than 2 grand it costs you total to set up an LLC with a very seasoned attorney is well worth it.
Yeah, well, I don't make mistakes, so I don't have to fall on the sword very often. So,
Oh man, I know if
no,
I
but
say that,
I will
I,
say that it is a lot better because, and yeah, I do make mistakes, and when I do, yeah, we're very good at making things right and fixing problems if we make a mistake. I'll tell you that.
yeah, no, and I certainly I know that about you. I can tell that about you, but that goes back to having integrity, and obviously that's one of the reasons why you're here is because we do believe that about you, and that's why we bring you in front of people. So one of the things that we work with a lot are people who invest from other countries. Some of our clients are people who they still have a social, they're from here, but they're working overseas. And then a lot of our clients are actually foreign nationals, so they live in Australia or they live in Canada. Is there anything different in terms of creating an entity for someone who's not a US citizen or is not living here in the US?
Yeah, and it gets very, very complicated. So it depends on the country where they are. So the U.S. has tax treaties with most countries, not all of them, and you want to talk to which if you're working abroad or you're a foreign individual invested in the U.S. If you don't already have an international tax CPA, you need one. Um, that's probably the most important professional you can hire because they're going to tell you what to do. I've literally had, I think it was the Hong Kong investor. I had to set it up as a C corp here in the U.S. that was owned by, I can't remember the type of entity in another country that was owned by them in Hong Kong in order to minimize their taxes. So yes, it matters a lot. So if you don't have an entity though, and you're not a U.S. citizen, also keep in mind when you go to sell that asset, there's like FERPTA issues, mandatory withholding issues, a lot of things to jump through that you can avoid if you plan it before you acquire. So definitely get an international tax CPA to understand those issues between the two countries because every tax treaty is absolutely different. And you don't want to find yourself paying taxes here in the US and then income taxes on the money wherever you are because those two tax rates combined may be like 70%, and then you're losing money at that point. So it's very important to pay attention to that.
So when someone creates their LLC, who do you recommend they put for their registered agent?
I mean, it depends on what they do. So if it's somebody that is in the business of acquiring a tremendous amount of rentals, or they are um, in a business that could result in and have a higher propensity for lawsuits, then you should probably name your attorney in that state as your registered agent because the person you want get the registered agent their whole purpose is to receive service of lawsuits. That's what they're there for. So if you already have an attorney that would handle your lawsuits if you were to receive one, then you might as well name them because you want them to know the second you get sued, right? If you're smaller and everything's in the same state that you reside in, then I would just use yourself. The other option, which is what a lot of people also do, is you use a professional registered agent company. Um, was it CT Corporation? Is that the name of them? I mean, there's
I
a
think
few of them.
you.
Yeah,
Yeah.
there's a few of them. You pay them. like $150 a year or something small like that. And they act as your registered agent. There's usually additional fees if they actually get served, but for the most part, they're just sitting there at the Secretary of State. If you don't have a registered agent, or if you were to hire one of these people and never pay them, and they just like cease being your registered agent, this is where it gets dangerous, is they serve the Secretary of State. If they serve the Secretary of State, you're charged with having actual notice of that lawsuit. The Secretary of State is not going to let you know, not necessarily at least. And if they don't let you know, you will get a default judgment against you. It's probably not going to be appealable either, because you kind of like gave up on being responsible and giving people a way to let you know that they want to sue you. So,
Yeah, no, I agree. And, a lot of people ask me, well, will you be my registered agent? And the answer is no. Most of the time, what we see is people put their attorney or they hire one of those places if they're not here
yep.
local. And that really is probably the most seamless way to do it. But one takeaway I do want you to have from as he's talking about this and all these little nuances, when I tell you when you're buying two or three houses that you may not want to do an LLC right now, these are all the reasons why. These are the costs, the time consumption, the ongoing reporting, the things that you have to do with an LLC. When you're running a big business, of course, it's absolutely worth it. But at this point, when you're just getting started, you have just a few houses, that's when it's kind of this gray area. And especially for those of you who it's going to be 2, 3 years before you sell and double and take that equity and keep going, the last thing we want to do is take your cash flow. We don't want to take from your cash flow at that point. And so I think the big takeaways to remember are getting sued is not common. LLCs are a great option as you have exposure that needs to be protected. And it's great to talk to an attorney and get those consultations done as part of your investment plan, so that you know as you grow what it is that you want to do. And so that is really a big focus of the people that we bring, and why we talk about these topics, because there's just so much bad information out there. There's so many people out there doing all this advanced structuring and trusts and LLCs and all of the scaring people. And I see it a lot coming out of California, out of New York. And really the people who win in those situations are these attorneys and these groups who charge so much money. I have clients call me with like, I paid 10,000 to create this entity to, now I'm protected. And it's a really, really bad situation. And I had one client who called me, they did one of those, and they didn't ask me first, they went and did it. And then it turns out the guy wasn't even a licensed attorney. It was a paralegal pretending to be an attorney from the firm, charging people, tens of thousands of dollars. And so it's just really important. Make sure you know who you're working with. Make sure that you've got a plan up front and that you come up with that model. And, whether you're journaling, whether you're doing, I'm a spreadsheeter. I put everything on spreadsheet, my plan on a spreadsheet, and I can always go back and, reference that. But at the end of the day, it's just get the information, be armed with the information, and then making decisions are going to be so much easier. And at the end of the day, I think that the more armed we are with information, the better decisions we're going to make too. So we have a bunch of questions. So I want to remind everybody that you can put your questions in there and we will answer those as we go. Matt, is there anything else you want to add about anything that we've talked about, or any kind of final cautionary or maybe, positive of really what you see on a day-to-day basis working with customers looking at LLCs for real estate?
Yeah, the one thing I do want to kind of drive home is if you're approached by a group, or if you find a group that has some sort of if you ever hear anybody say, "Hey, this structure that we're offering is unique. It's never been done. It's brilliant. It's going to save you tons of money on taxes," you know, it's probably a scam. I see it a lot. I vet those a lot for people. I've never seen one where it was even remotely close to unique. They usually involve trusts. Um, Trusts are typically a waste of money depending on where you live. There could be a reason for it, but typically they're a waste of money when it comes to real estate investing. There can be some very rare instances where they are useful, but they should not cost you. I had one client that literally got quoted, not lying to you, $58,000 to set up his trust structures. and it was supposed to save him millions of dollars in taxes. And I'm like, don't sign that, and get on the call with the people. And yeah, it's a scam company, you know. And when I'm on the call, I asked the two individuals trying to pitch it. I'm like, well, guys, I ran you before this call, and I see you both have federal tax liens against you. How in the world do you think you're qualified to offer tax advice if you're not paying your own taxes? So, yeah, that's the kind of people that are out there. They typically are not attorneys, as you said, they're people that are pretending to be, and so you just want to be cautious about if it's too good to be true, it's too good to be true. So,
Yeah. Yeah, I mean, like I can tell you, even at where I am and my career and my life and 4 kids, I don't even have a trust. At this point in my life, haven't had a need for one yet. So even those of us with very complex things going on are often not in that state of mind because we understand, when you pass, it's not as difficult as people think. Where it's difficult is when you don't make your wishes known, when you don't make your assets known, when your records are not in order. That's when things get really, really hard. And so it's important that you have that stuff in order. But some of this complex structuring that's out there, and they're preaching it to people that don't have a need for that at this point in time. It's just a money grab. And I see that a lot. That's just one story of many that I have. So I'm glad to know I'm not the only one running across this, Matt.
like, all the time, it's ridiculous.
All right, so I have a stack of questions here, y'all. We've got time. Matt already admitted to me he's clear till 2. I told him I have a date with the greenhouse, but let's get going with all of these. So I think we've already answered this one, but I'll ask it anyway, just as a reiteration. Can we get an LLC for an immigrant who's on an H-1 visa?
Yeah, totally. Again, we would probably want to talk to an international tax CPA to confirm that we're not violating any tax treaties and making sure that we're maximizing their profits and minimizing their tax burden in this country as well as their country of origin. But
Yep,
yes, you can.
great. Okay, next one. With the CTA being enforced, oh, someone's reading up. Good job. With the CTA being enforced starting January 24, is it likely that the number of LLCs will decrease, especially in the case of the specified value cap per each LLC, which seems to be prevalent in real estate type LLCs?
All right, so I'm assuming we're asking about the federal registration requirement
Yes,
issue.
I believe.
Yeah. So I think it's a money grab,
Hmm.
and it's a way to give the federal government the ability to target small to mid-sized businesses. Um, no, I don't think it's going to change the volume. I can tell you that what we've implemented in our process, and as well as CPAs that we know have implemented in their process, is it's just a additional thing that gets done when we file it. It probably will eliminate the attractiveness that some people think's important. Obviously, I hear all the time people think that they want to be anonymous or whatever, and I'm like, okay, that's in my opinion, that's stupid. There's no need in that. Some people like it. That's fine. That's their take. But it will eliminate. You're no longer going to be anonymous. Okay. If you own an LLC, you're not going to be anonymous. I don't care if you form it in Delaware. So it's probably going to make people be more accepting to forming LLCs in the state in which the property is located for purposes of real estate investing. Outside of that, I don't see it. The registration is pretty simple. Well, let me rephrase that. The initial guidance on what the registration is going to be like is pretty simple. However, um, there should be a retooling in the regulation that's going to make it clearer on exactly what they want us to do with it, because there's still a little bit of confusion there on what all needs to be provided and when. But yeah, I don't think it'll have a massive impact. No.
All right, next question. Management LLCs using a checkbook LLC either just for property management or inside a revocable living trust. Are there benefits?
I mean, that's always going to be a case by case basis. It sounds like you're overcomplicating something that could be very simple. If we're talking about a checkbook LLC, I'm assuming we're talking about a self directed IRA LLC. Um, in that instance, I am a fan of that structure, and that's a structure to where the owner of the LLC is the custodian of your self-directed IRA, and then you are the manager of that entity, and so you have check writing authority. I don't know why you would complicate it with a trust. Um, I don't know where there would be any value there. But I have set up a lot of self-directed IRA LLCs. I think it's a great structure. The key there, though, is if you are the manager and it's your IRA, you have to make sure you receive no financial benefit. And no matter how small that financial benefit may be, um, directly, indirectly, it could trigger, an event to where you're in violation of the IRA rules, which means they could tax you and penalize you over that. So you just want to be very cautious with it. Usually, I use self-directed IRA LLCs for the purposes of lending money, not owning real estate, but you can use it for both.
Great answer. Legally, if a child is a beneficiary of a trust, are their distributions liable to divorce judgments?
Depends on who drafted the trust. Typically, no, because a well drafted trust is going to have what's called spendthrift provisions. The money used to fund the trust is going to be considered that beneficiary's separate property, because it's a gift, right? So, and I'm talking Texas law now because it's going to get state specific, but um, the distributions that would come to that individual would not be subject to garnishment typically, because there will be a spendthrift provision that disallows any creditor, which would be the ex-spouse, from going after those funds. However, once those funds are deposited into the bank account of the recipient, those can be attacked at that point. So, but yes, they can attack the trust. They can't attack the distribution, but once it's made, they could go after the bank account of the individual.
What does it cost on average to create an LLC in Texas, including an operating agreement? And I think I'm reading into this that he wants to know your fee to create an LLC for someone here in Texas.
Yeah, so I mean it varies depending on what you're doing, but I will tell you the average cost is we charge $550 and the Secretary of State charges 300. That's what our average cost is for a normal LLC, and that includes everything. If it's a deal to where we have a lot of complex things going on that we need to account for, it's obviously going to be more. If you're going to be using it to raise money, that's a different beast altogether. If you're using it to raise money, then we refer you to an ERISA, not ERISA, what did I say, an SEC attorney, that is familiar with all the SEC rules on raising money and making sure that we don't get lumped in to those guidelines. We don't do those types of vehicles, but we refer those out. Um, but yeah, like traditional ones, you're looking at probably 850.
Awesome. Do you, I'm probably going to take this one. Do you suggest to form an LLC before or after a purchase? And if before, how does it affect financing? So it depends on the type of financing you're doing. If you're going with a conventional or Fannie Mae, you now can transfer it to the LLC after closing. So if you're closing on a loan that requires it to go in your personal name, it really doesn't matter when you create the LLC because you're not going to transfer it till after. If you're doing a loan where you're putting it in an LLC, the LLC has to be completed and ready to go before you do that loan. Most lenders don't care about the LLC having history. They care about it being properly created. And one thing I will add to that, and Matt, feel free to pipe in, some of these states where you create LLCs can create lending issues. Some series LLCs can create lending issues because banks don't like having to go after either that state or that type of structure. if there ever was a default. So you want to make sure that you check with the lender. If you're not going to, like, Texas is easy. If you're forming a basic Texas LLC, then you don't need to worry about it. But if you're trying to do something a bit more complicated, you want to make sure it's not going to affect your financing type either. Anything you want to add to that, Matt?
No, that's 100% accurate. You're good.
Okay, here's one. Some states considered husband and wife LLCs as partnerships, so it's important to know the rules in the individual state as it can vary from the feds beforehand.
Yeah, I mean, each state's going to have its own rules. The federal government is always going to have the same rule no matter what state you're in. Um, like, not trying to make anybody angry here, but I generally discourage husband and wife entities. I do. Um, um, it doesn't change. It can just really complicate a divorce. We'll just say that. And the reason is because if you have an entity that you both co-own and then you go through a divorce, well, now we have to figure out how to break this company apart. And anytime you're doing something like that and you're allowing, I don't know about all jurisdictions, but in Texas, most counties have family court, which these are judges that only deal with family law matters. They don't deal with real estate. They don't deal with business structures. They don't deal with any of that. And so they may think, oh, it's simple to just break this entity in two, and it's not. Now, if you have some sort of if you really want to do that, I would advise having a limited postnuptial or prenuptial agreement that is only related to what would happen with this company in the event things don't work out. And I have had multiple clients that took my advice on this and they got divorced later on and they still to this day own that entity together and they're both making way more money than they ever would had they have not had this agreement in place and just tried to break it apart. Because people get really irrational during divorces and rationality has no place in business. So that's always my biggest concern about doing a husband and wife LLC. But if you do it, yes, you definitely need to know and understand the laws in whatever state you're in, and they do vary greatly.
Thanks, Matt. If I'm getting a mortgage for my Texas rental properties, how would I get the property into an LLC, e.g., bank loaning to an individual and not an LLC?
Yeah, you just deed it into it. So here's the thing, to demystify it. Um, Most of my background, as I discussed before, has been in the default world. That's just where I feel at home. I understand it very well. I've never personally seen an instance where a bank's called a note due based on the due on sale clause only, right? Um, they don't do that. Can they? Yes. I do know of one other attorney that has seen one instance of it just for that purpose. It was not a major lender though. Um, However, if I go out and I buy a property in my name, a mortgage in my name, and I put it in an LLC that I own and control, they have to send me a notice and a right to cure. That right to cure is very simple. All I do is I deed it from my LLC back to myself individually, and then I'm good. And then I can immediately turn around and do it again. And I can keep doing that and the bank is going to spend so much time and so much money doing it and they can't penalize me for it, they can't charge me for it, that if everybody did that with all their loans, all banks would go bankrupt. That's why they don't care about that. What they do tend to care about more, but still don't typically do anything about, is where you buy a property, you get a loan in your individual name, and then you convey it to my LLC. That's a little bit different. It's not to say that they're going to do anything about it, but that's one that's more difficult to cure. So there is a risk associated with that type of activity. That's a subject to transaction, or you could call it a wrap if you're adding on. But just strictly moving it from your individual name into an entity you own and control, the bank's not going to do anything. And if they do, it's an easy fix.
So one question I get asked a lot is if I do that where I transfer it from my personal name to my LLC after closing, how does that affect my title policy?
Yeah. So the key is you want to use, used to, I would tell people to do a special warranty deed, but recently in the last 2 or 3 years, title companies have been problematic with that. So a title policy is going to cover you as the owner until you sell the property. Once the property is transferred, it's no longer going to protect you except as to your warranties, right? So if you do a general warranty deed from your individual self to your LLC, you would, if the title company makes you, which they might, which is stupid, then you just have the LLC sue you as an individual, and then you can file the claim because you've got the warranty out there that would cover whatever the prior title issue was.
All
Does
right,
that
I've
make
got
sense?
another. Yeah,
Okay.
no, that makes perfect sense. I knew the answer. I was just looking for
Oh,
you to answer.
okay. Yeah. Okay.
All right, so I have a follow-up from the person who asked about pricing. Does that 550 include operating agreement? And also, can you create LLCs in other states, or do you just deal with Texas?
Yeah. So the 550 is the operating agreement and everything. And then there's the $300 filing fee on top of that. I'm personally licensed in Florida as well. Um, so I'll create LLCs there. I generally don't do them in other states. Have
Okay.
I in certain instances where it's a client that I represent routinely in a lot of business and we need a quick entity formed? Yes, but I generally would not.
Okay. And then I think this is our last question, so last call. Does the CTA count the spouse and the LLC as a majority or controlling agent due to how courts hold husband and wife joint ownership, even if not named in the LLC?
That's one of the things we don't know. I was talking to a CPA about that almost 2 weeks ago. There's still a lot of confusion on what all is going to be required. And a lot of people have been like sending in to the government to try to get guidance on, hey guys, you're not answering a lot of questions on this. We don't know what we need to do to comply. We're going to do best effort, but we don't know. I will say with entities that have been in existence, like we have until the end of the year anyway, as of right now, to file this stuff. And so most everyone is waiting until we get further guidance. But no, I don't know the answer to that question. Uh, we'll just
We
see
all
what
wish
they
we
come back with.
did.
Yeah, yeah, I have no
Yeah.
idea.
Yeah, none of us are particularly happy about this. It's just one of those things that is what it is. And if you couldn't tell from Matt's earlier answer, that was a very Texas answer.
Yeah, yeah,
Well, Matt, I can't thank you enough for being here. I know everyone based on the number of people that have hung around for an hour and a half, have really enjoyed this. So thank you so very much for being here today. You've got his contact information. If you need anything, of course, y'all know how to reach me. I thank everyone for being here today. I look forward to seeing you at tons of the upcoming stuff we have coming. Hopefully, the in-person event that we have next week. No pressure, Matt. And other than that, I hope everyone has a wonderful, safe weekend. If you're here in North Texas, the weather is beautiful. I hope it is where you are too. Stay safe. Thank you again for being part of the Slaughter Investing and all the other companies family. And I'll see everybody soon. Thank you so much.
hey, thank you for having me too.
Absolutely. Thanks, Matt.